The next stock that we did say was shorted MO, Altria Group. So Altria has been a powerhouse nonetheless, and I have had some backlash with some of my other inner circle members here in terms of shorting Altria. But when I look at Altria, first of all, for those of you that don't know, Altria is a consumer non-durable tobacco. So everyone is going to continue to need their tobacco when smoking. But the beautiful thing about Altria is it's trading at a PE of 41, just over 41, which is exceptionally high. Now, it is a safe blue chip company. It is paying an awesome yield of 6.55%. So you have to give it credit in that department. It's certainly more of a value play, which I think we have certainly witnessed the majority of money flow into this stock as a value play ever really since, one could argue here in December, the new year, this has gone on a beautiful rise. But one of the key things, and this is a weekly chart that I'm looking at for Altria here, is the fact that here you had your original breakdown, and now you're almost into that double top resistance. When you had this breakdown, this was a topping pattern, M top or a head and shoulders formation. Here was the neckline of your head and shoulders formation, and this is where you broke down, retraced, closed above, confirmed above, and then had a complete sell-off down, which ultimately probably triggered the full downside move of this head and shoulders. So now when you extend this neckline all the way forward, look what you ran into today on a weekly basis. That's so cool. At least I find it so amazing that the technical resistance points, if you just simply analyze it, okay, the neckline was once again previous support, and then it was resistance, and now you've run into it again and it's major resistance. And it's so wild that it happens to line up with a pretty much a near double top setup formation, and I think it's a beautiful short. You have had 1, 2, 3, 4, 5 weeks of upside in a row. Last time we saw 1, 2, 3, 4, you had a big pullback. It's been a while since this stock has had 5 weeks of green upside in a row, and then it usually favors a pullback. So we are in the camp that it's certainly a pullback is due. One of the other reasons why we took that trade was, well, we have the resistance of the neckline. We have this double top scenario, not quite a double top, but certainly a strong pivot resistance point intersecting with more or less the neckline resistance. And then when you look here, you have this three-tail theory of a topping tail on a daily basis, followed up by another inside bar retrace candle, which also has a fair decent sized tail. And then you follow it up with a beautiful third reversal candle with yet again another 3 tails in a row. That suggests that there's major sellers up here. And with this type of price action in store, I definitely think there's a tremendous probability of more downside. Where do I think the downside could go to? Well, ultimately, I'm looking to probably exit this position for, say, a 10% gain. But realistically, if you're willing to hold on a bit longer, I do think the lower end of this channel will be your next support zone. You should get some bounces, especially probably in and around this area over here. If you draw a trend line going across there, that's probably where I'm going to look to exit, right on this trend line. I just like to bank my profits and look for the next higher risk to reward setup. Because ultimately you could get a bounce off of this trend line and then a retrace back all the way up. Who knows, right? So I prefer to bank my profits when I can. So ultimately a retrace back to this trend line is probable. If you're looking to squeeze a little more profits, then somewhere in and around the bottom of this upsloping trend line will be certainly a good place to unload and potentially look for a bounce trade. Now it really depends on how we get into this support zone, like in terms of if it's a straight drop or if it's a bear flag consolidation lower, blah, 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 blah. You have to kind of analyze the pattern and how the formation gets into that specific area before you can execute a trade. So it's very, very key to pay close attention to the alerts. This could go a little bit higher, which we will look to add I didn't go over that. If this was to go a little bit higher, since we've now had this small pullback off of this level, if it was to continue trending higher, we would look to add at a pierce of this double top. So, you know, this is somewhat around 56.80, so probably around a pierce of 57, we would be looking to add again to increase our short exposure on Altria. The next stock that we added is Alcoa. This has been one of our favorites. Once again, we're back in Alcoa. I think we've played this stock 3 times, and it was not too long ago that we just unloaded our short. We've unloaded our short now twice. You can see at this red level here and this green level. And now we're back in it roughly at the same level that we shorted again, just to start our position. Alcoa is running into earnings. The one thing that I'm noticing is that there's been extremely light volume on this stock, and I certainly think this reversal candle is still holding true in effect. The big level that I'm watching is this trend line over here. If you for some reason happen to break that trend line, then I ultimately think you're heading pretty much to this area down here, this 57. You could get a couple bounces along the way with the higher volume days in certain candles, but ultimately once you break this trend line, then I do think that's trouble. The pattern, the technical pattern, will start looking to make a series of lower lows. So that's very critical to watch. Could Alcoa continue going up? It absolutely could. One of the reasons I think it's overextended is the fact that it's been an aluminum play. Obviously, it's a commodity affected by the war, the Russia's supply chains, and inflation. With the commodity shocks recently, it certainly had its run. But when you look at Alcoa on a weekly basis, I just want to show you the extent of this move. You know, from the low here in March, look at this parabolic rise. That's truly a remarkable move in the price action of Alcoa. And you're running into some previous all-time highs that are very, very close. Very, very close once again. And you did pierce this all-time high, but you had a pretty nasty reversal down. And one of the key things about Alcoa is when you compare it to past cycles. So I'm specifically talking about the 2017-2018 cycle. That was when the cusp of the rate tightening cycle was finishing. So Alcoa right now is trading with a PE of around basically just under 40, which is exceptional. You know, it's trading like a tech stock when it's an aluminum play, and aluminum has certainly had a squeeze due to Russia and not exporting certain commodities. But nonetheless, just under 40 PE. In 2017, it had a 46.44 PE, so just slightly higher than what it is now. But the crazy thing is that when this stock hit 2018 and the tightening cycle was in full-fledged and hit its peak, then this stock dropped to 22.13. It was pretty much sliced in half in terms of its PE. So if you just simply think that the PE currently should follow along the same lines as the 2018 tightening cycle, and someone could argue that this tightening cycle is going to be worse because there's more debt, because there's way higher inflationary pressures, that the PE could even potentially go lower than that. So where are we looking to unload? Well, if we flip back to the daily chart here, basically a nice another 10% would be a beautiful trade. So roughly, you know, basically testing this pivot low down here around 80 would be a good level to unload. Now, I may hold Alcoa a little bit longer, just depending on what the price action does. There is a key gap fill down here, which would be a beautiful technical level to unload into. That's a nice 16.3%. That seems like a pretty sweet gain, and certainly achievable. Let's just see where more or less where the 50 days and the 200 days. So what I've seen on a technical basis, you're starting to hammer off this 50-day. It'll be key once you break this 50-day. Once you break the 50, you're going to test the 200. And I think that's certainly in store. It may just take some sort of easing of tensions in Russia and Ukraine, which, you know, I'm surprised that it hasn't certainly made more diplomatic progress. But that's a whole another debate and certainly discussion to occur. Let's just see what else we did today. I'm just going to check to see what other alerts. Sorry, there's some personal stocks that I don't issue alerts for. You have to remember that I trade with the best interest of the group and the collective, and there's certainly some more riskier plays that I like to do, but nonetheless, OKE was another one here that we shorted today. One of the reasons I shorted this, well, first of all, the level that we got in at was on this green dotted line here, 72.70. It's pulled back slightly from our level, so that's good to see that we're in the money and there's sellers lurking where we're shorting it. So shorting OKE, one of the reasons why is you had this trend line here connecting with this pivot high, and you're running into this chop, and you've pulled off of that trend line perfectly. So this trend line is resistance. So far, when you've pulled off of it here and potentially here, you should head down to the lower range of this channel. A secondary cofactor is this trend line here. You connect the pivot high in 2014 with another pivot high in 2020, right before the COVID crash, and look what you just tagged today. Technical brilliance. I love trend lines. I love multiple pivot high long-term trend lines, especially when stocks are into potentially overbought scenarios near the all-time highs of their chart. Let's just flip to the weekly basis on this chart, but these trend lines are so fascinating to me. I just absolutely love them. But if you look at the moves that this stock goes through, this stock has its big rallies and then its bigger falls, has its big rallies and then its bigger falls. So right now we've sufficed the trend where we've made a new high, made a new high, made a new high. Now the question is, we're in this broadening formation. So in terms of fulfilling and continuing the same cycle, will we head lower to continue the cycle and make a new lower low in this broadening formation? That would be truly an all-out bear market if this specific stock went all the way down to this low end of the channel. But you can't ignore the cycles. I mean, cycles are the one thing that's kept me out of trouble since I've been trading. Analyzing cycles and knowing the patterns and just knowing the overall macro trend is critical to increasing the probabilities of your analysis. So this stock is oil and gas. I do think as we fight inflation and as the economy slows, as the interest rates tighten and monetary is being withdrawn from the system, that the oil and gas should come down in price, which means less profit for these said companies. After all, they've had a tremendous run. Demand has increased. Also, natural gas is going through a building season. Its withdrawal period just ended, so now we're starting to restock the reserves and hopefully get into the several trillions of cubic feet. I think the goal is around 3.6 trillion cubic feet in the cubic meters in the reserves. So that I think we should probably achieve. And if they for some reason end up stocking more, that just puts more overall supply demand issues in favor of the short side. So if you are able to stock more reserves, then that's going to be bearish for the price, because more supply means you can fulfill the demand easier, which means the price should head lower. Okay, so that's another one we'll keep our eye on. It could potentially go higher, but nonetheless, it is at the all-time highs of the chart. It's certainly running into two key trend lines. You have had a little bit of this bullish consolidation, but the one thing that's standing out to me is this specific distribution of volume here. This large 8.6 million volume candle, which was this red candle here, that stands out to me, and it ended up being more selling, more shares being traded to the downside versus the upside, and that's really the standout daily volume candle, and it's a red one. So just be very careful of the volume candles. You have had some pretty big red candles here, so we'll have to see if the selling continues or if the buying pressure continues. If this goes up a little bit more, we will add to the position, accumulate. putting us in a position to make money on a great pullback.